All righty, I'd like to welcome everyone to the trade findings and adjustments for Thursday morning, the 18th of 2019. First of all, happy Easter weekend. Good thing I can't spell. Don't forget, markets are closed tomorrow, so anything that we do today is going to go through a 3-day weekend and some time decay. Obviously, last Tuesday, I spoke of doing a protective put strategy on, what did we do it on? We did it on FCX. And pretty neat because FCX, if we do a chart, again, I'm going to apologize. I am in an office day. Wow, good thing. FCX the other day was all the way up to 1468. And I'm going to make a quick observation here. I spoke of doing a protective put strategy, but if the stock starts to take off, should you add a bearish position to a bullish stock? Thought process. I want you to think on your own here. If your stock starts to start up a little bit in the morning, does it make sense for you to all of a sudden go throw on a bearish position? Obviously, some of you are going to say yes, some of you are going to say no, and it's kind of funny because it's a risk tolerance. But yesterday, I got into the stock and not a lot of shares. I think I only had 300. I was going to do 400. I think I only did 300 actually. Got into the stock and sold for a even 50 cent. Wish it was $50 profit on 300 shares for a 1-day return of, and I need to get my phone for this one, 2121. 50 cents divided by 1412, I'm pretty sure 3.54 for a 1-day return of, I actually thought it was 3.8, 3.54% return on investment. And then obviously I could go and annualize it like some of these other jokers and tell you we had a 200 billion% return and you guys should always just do this. But this was a common sense trade. This was a, hey, it's pre-earnings. I did not know the day before that it would go up 68 cents. I did not place a bearish position on a bullish moving stock, and it only opened up like 2 cents to the upside, then 12 cents. I decided to wait. If you are in FCX with a long put in place, that is also not a bad idea. You can still run the trade, but you could have gotten out with a 1-day return of a 3.54%. For me, it ended up being $150 minus the in and out, probably $750 for commissions. You know, it was $142.50. A quick, easy 1-day trade. Kevin, you didn't tell us you were going to do that. My short answer is no, I didn't. I'm a real trader. I'm not paper trading. I'm not giving you guys a trade to follow. I am trading in real life with real money. Hence, for something like this, I took a return and my trade changed between talking with you overnight and the way it opened. If you're looking for an education, need an education, give me a call. I'll put you in touch with someone that does some great education. They are an amazing person to go to, and it'll be a lot of fun. It would be an amazing amount of learning that you guys could understand what's going on versus just blindly following someone. I would suggest you never blindly follow and definitely get the education you need to understand what you're trading and why. So let's talk the market being closed. Market's being closed tomorrow for Good Friday. And we want to find something to place a trade on over a 3-day / time decay weekend. So if we're looking something for a 3-day time decay weekend, what do you think? We look into something that's trading next week or possibly the week after, something that big money could come into. You've got, well, I could just pull up where is that? Let's see here. Let me find. I want to open. Our list. If you come into this with the attitude, hey, show me what to do, and I'll do it. Control C. Does that make sense? So just the second thing is there's our list. Anything you see that might be intriguing that you could look for a 3-day credit spread, a short term. Hey, let's give it a pop. Let's see if it'll move more. I know we have a possible China deal, so I'd probably be looking technology. But really, you're looking for the time decay over a 3-day weekend, a short-term credit spread, or you're looking for something longer term to get you through earnings. There's no, I don't know, you're looking at a weekly or you're looking at a 6-monther stock ownership in something. What do you see that you like? Trade Twitter with an ER on Tuesday. A lot of good news on Twitter. They came out today. Let's take a peek at Twitter. Let's see. Well, it was up earlier. It's now flat. Boy, that's awfully flat, but that's not bad. At 34.39. Twitter hype on Tuesday. They're doing things right. Down to 32.88. I wonder what could we get on Twitter? Twitter, April 26th. Could we get any credit for we're just really just want you to be successful. So it's going to ask you to make a decision one way or another. 32, we could get 99 cents. Where I have recommended 99 cents. Someone's ready to talk to you. I'm going to head back to the hospital after this conversation. Good luck with this. 43-cent credit. 43-cent credit for $1.50 risk. A 43-cent credit, so that's about a 2.5 to 1 risk to reward. 50 cents for $2. That is a 3 to 1. 44 cents on $1.50. 44 on $1.50. 44 divided by $1.50. 29% return. 44 on $1.50. 44 divided by 106 is a 45, but a 44, 150 divided by 44, 3.4. Huh. So you're looking at the 200-day needing to hold for a day. You'll have 3 days of time decay, but you'll also have an increase in volatility, a pretty significant increase in volatility. Earnings on the 23rd. Whew. 410 on 1,090. That's a, two and a half losses for one return. That's not bad. That's an interesting idea. That's really a really interesting idea. I like the time decay. I really like the time decay. Time decay should definitely help you, but really, the neat thing about this one, right? The neat thing about this one is you're going to go through 3 days of time decay. Three days of time decay. You only make 7 cents a day, so we might get 21 cents-ish. Now I'll probably only get 15 cents. $0.02 time decay. Well, the short answer is I'm in with it. We'll see if we get filled, though, and I want to get filled at 44 cents. 44 cents. So if I don't get filled at 44 cents, I won't be taking it. What's there between 41 and 44? It's 3 pennies, but 3 pennies in this position is about 7% of your overall profit. 41, it is. It's 7.3%. So I want the 44 cents. If I don't get the 44 cents, I will not be in the trade. And really, all I'm playing, in all honesty, I am playing nothing more than the downside lows here, knowing I've also got the 200-day sitting right there. I don't know why, because the 200-day didn't help me out here at all. Didn't help you out here at all. We did get a bounce, didn't help you out, acts as resistance more than support. And the 200-day is obviously downward sloping. So really, if I was smart, which I'm going to be smart here, I'm actually going to I want the 45 cents. If it fills, it fills. If it doesn't, it doesn't. But that's going to make this a trade for me. That way, with short, looking for time decay over the weekend, it's a short-term trade. Am I going to go through earnings? I don't know yet, Rich. We're going to have to talk about it on Monday evening. Twitter. It wouldn't be smart, but there's been a lot of good news on Twitter coming out right now. Dorsey's doing some changes to it before the market opens. Ooh. In all honesty, I would probably be trying to get out or expecting to get out on Monday at the end of the day. Monday at the end of the day, with hopefully a little bounce on Twitter, is what I'm trying to do. In fact, if anything, I'm looking for a little downward movement today. Downward movement today. Which I'm definitely getting, right? If I get bit down to 34, 33-ish, test the lows today, or even come down to 34.30, I am most likely filled. I am doing 10 contracts to maximize commission, and that way, if I'm looking at, some time decay here, I'm trying to be okay with it, trying to see where we end up. What about the short put? Zero in it. I'm really not interested in open interest at all. Open interest doesn't matter to me. If I can't get the fill that I want that makes the numbers work for me, then I shouldn't be in the trade. Then I'm just guessing and I'm just throwing stuff out there. So, in all honesty, that will change. Most likely that will change today, only because you've got big money out for today. In fact, it's been light volume the whole time. So open interest 424 against 2,000. It's not a worry for me. Again, if it doesn't fill, it probably just saved me from a losing trade. If it does fill, there we go. That's what I would be in, and it's a pretty interesting idea, and it's a pretty interesting trade, to be honest with you. Good, interesting one to bring up. So we're looking at a Twitter bull put weekly for time decay and a Monday pre-earnings pop. Looking to get out before the end on Monday. Rich, great position to point out, and it makes sense. I don't just randomly throw stuff out there just for the hell of it. The neat thing is I don't have to be doing these. These are something that if it doesn't make sense, I don't do. We have gone through no trade at times, but I was looking for something that we could take advantage of some time decay. Hopefully our credit doesn't eat it all up on us. And come on. And I like it. I mean, the short answer is it makes sense. It does make sense just looking at the chart. The chart is telling me how I've got some downside protection, maybe not through an earnings, but up until Monday to make a good educated decision. So with that said, any questions? I will do the best I can to get this out to you. And the interesting point is use your brains. As you're looking at individual trades to do, if you don't like it, if it doesn't make sense, just don't do it because someone else tells you to. Just don't do it because someone else is doing it. Just don't do it because most likely someone else is doing it in a paper trading account. Significantly different than trading real money. Any questions you guys have for me today? If not, obviously enjoy your Easter weekend. You'll probably see a pretty volatile last couple hours today. That's also I'm going down to 44 cents. It would not surprise me to see Twitter touching $34 today. We do have protection at 32.88 on the 200-day simple moving average, and I would expect, especially since what I saw on the Fox, I think it was either Fox or CNBC today, they really talked up Twitter quite nicely. Interesting to see maybe a pre-earnings pop as people are buying in on Monday morning. I don't need the whole 45 cents, but boy, I'd sure like 15 to 20 cents. 15 to 20 cents on 10 contracts is, $150 to $200. That's my target range, or I'm just trying to book a hotel room for a night somewhere in that area. All righty, guys. I've got up to 16 of you. Anything else I can answer for you? Or actually, let me go ahead and ask it this way. What are your thoughts about this trade? Yes, no, maybe so. Give me the positives, give me the negatives. I want you guys to think for yourself. What do you guys think? Rich says a yes. Rich, jump into your account and have at it. Ida, what do you think? You're the one that brought this to our attention. Right? Earnings are Tuesday morning before the market opens. So if they blow it, you need to expect that they will not hold their 200-day. And their 200-day is only down, 3.5%, maybe 3.8% to the downside. But I like the numbers if I can get filled at that 45 cents, and I feel that 45 cents gives me protection through a pretty thinly traded market on an options expiration, a monthly options expiration today. So that's kind of why I want that 45 cents. If it doesn't get filled, not a big worry. I'll run off to the next one, and that's good. In fact, I was kind of thinking about Apple. In all honesty, I would also look to do something like this on Apple. It's a different technology to play. I might even like Apple a little bit better. Let's take a quick peek at this one. I might not. Although Apple is already oversold. That is the difference between Apple and Twitter. And it's 190, so I'd be playing the 200, but 200 is just horizontal. In all honesty, technically, Twitter looks better than Apple. Because I do a 200 like 95. I'm sure I'm not going to get the same reward either. A 295. $1 on 24, 75 cents with $5 of risk. Yep. Twitter mathematically and technically is a significantly better trade than a 1 week bull put on Apple. All right, guys. Hey, have a wonderful weekend. Enjoy your Easter. And for all intents and purposes, take care. Enjoy yourself. We'll see how this one works out. Feel free to ask me about it on Monday. You guys have a wonderful weekend. I will look forward to a day off tomorrow, and enjoy your Easter. Goodbye.